Now, apologies for running late to the Secretary of State for Business Innovation and Skills and his two fellow panelists on this session, but may I invite Vince Cable to come and make his keynote speech about trade and how important free trade is as an engine of growth nationally and globally. Vince Cable, thank you very much. I do apologise again. And yes, if I could introduce Olusegun Ogango, who is Nigeria's Minister for Trade and Investment, if you would sit down, and Anand Sharma, India's Minister for Commerce and Trade. Thank you very much indeed. Industry, commerce and industry. Sorry, I was giving you a different portfolio there. You've all got the same job, but you've all got different titles.
Well, ladies and gentlemen, can I welcome you and say it's a great pleasure to share the platform with Minister Sharma of India and Minister Ogango from Nigeria. Today we're welcoming the world to London for the start of the Olympics. And this is an event that embodies the whole concept of open competition. And so today I want to focus on the specific question of the benefits of openness, particularly when it's applied in the field of international trade and investment. The starting point is that an open and competitive trading system offers potential benefits to everybody, particularly emerging economies, as it does to the economies of the West. It increases economic growth and productivity and creates employment. And so I'm delighted that Minister Sharma and Minister Ogango are here to share their perspectives on how we overcome the challenges involved in creating a more open and liberal system, because we have to deal with the barriers that remain, which are very substantial, while simultaneously dealing with the economic crisis, the worst since the 1930s, with which many countries, including mine, are still grappling. And perhaps if I can just indulge a personal anecdote. A few years ago, back in 2008, I wasn't in government, and I was trying to understand what the nature of this crisis was that was beginning to overwhelm us, and I sat down and to try and understand it, I wrote a book. And I tried to deepen the understanding by going back into history books and what has happened before historically when there have been major collapses in the financial system, particularly the banks. And if you go back through history, going back to the end of the 18th century, the South Sea bubble throughout a periodic crisis in the 19th century, and then perhaps most seriously in the 1930s, what happened was a sequence of events. There was a collapse, followed by a serious recession or depression, and then countries turned in on themselves, usually to protect employment, and trade warfare resulted. And particularly in the 1930s, after the 1929 crash, you had the regime of very high tariffs in the United States, and the Europeans, including the British, retaliated, and we descended into trade warfare. Now, fortunately, the position as regards trade is not as bleak now as it was in that interwar period. History, fortunately, has not repeated itself. And the trading system has, so far, withstood the pressure towards greater protectionism. We haven't seen the retreat behind major tariff barriers, and indeed world trade has been recovering. Between 2009 and 2011, for example, the value of world trade in goods increased by a spectacular 20%. But even so, I think we have to avoid complacency here, because many countries have been tempted to edge towards protectionism of one kind or another. Monitoring for the G20 found that while the overall levels of trade restrictions remain modest, there was a deterioration at the end of last year, and it's significant and unwelcome, because all our evidence is that trade liberalization is very closely connected in a positive way with economic growth. The standard analysis suggests that an increase of 10% in trade openness translates into about 4% increase in income per head. And indeed, the World Bank found that in the 1990s, income grew 3 times faster in developing countries that had lowered their trade barriers compared with those that hadn't. And so for mature and developing countries alike, free trade and consequently new trade agreements are the route to achieving long-term growth. And this is particularly true in the European Union. There are still many barriers within what we call the single market. Moreover, demand fueled by continued expansion in the emerging economies is one of the few motors of demand growth at the moment. And at the same time, boosting trade and foreign investment are amongst the few options now available to support economic growth without putting further pressure on severely constrained public finances. But clearly, increasing trade requires openness all round. Boosting export levels for goods and services is one part of the picture, which is why in the UK we have set a target of increasing our exports to 1 trillion a year by 2020. But of course, openness has to be in all directions. Trade has to be a two-way process. Trade openness in services as well as goods boosts the supply side of our economy, spreads new ideas and technologies, and provides a competitive stimulus. The research shows that a 1% increase in trade openness, and that's an openness to imports, results in a 0.6% increase in labour productivity across firms in Europe. So we have to scrutinise our own performance honestly and objectively. Within the European Union, I think we have to acknowledge that agriculture is still very highly protected. We have relatively high tariffs in some industrial products, such as clothing. We have significant non-tariff barriers, with studies suggesting that there could be the equivalent of tariffs of 24% for chemicals, 57% for food and beverages, and 20% for telecoms. And more recently, I think we have to acknowledge that the Global Trade Alert highlighted the UK's own migration controls as a barrier for trade, including UK exports. I mean, there is an issue which we have to confront here, that openness isn't just about goods, it is also about people and the benefits that countries derive from openness to business visitors, to skilled workers and students. And we have to reconcile that with reassuring our domestic population that borders are under control. We think we've struck the right balance here, but we'd appreciate feedback from business visitors as to whether they agree with us. And we do acknowledge that if other countries, particularly those whose economies are developing, are to remove non-tariff barriers, we've got a responsibility to practice what we preach. Now, previously, in tackling these problems, we'd have looked to multilateral negotiations. A multilateral approach is greatly superior to a plethora of bilateral agreements which risk fragmenting the international system. But it's very clear in reality that the Doha round has stalled. There's no sign of it moving anytime soon. And against that background, momentum has to be found in other ways to get trade liberalisation by coalitions of countries intent on making progress. One of the Doha round issues where there is some prospect of making progress is trade facilitation. That's reducing bureaucracy at national borders. This has a decisive impact, particularly on developing countries' capacity for growth. Analysis suggests that every additional day that goods are spent in transport reduces enormously the prospect of overseas buyers sourcing from that country. And the potential gains to emerging economies in this field are great if the costs of procedures can be reduced. And we in Britain are willing to argue very strongly in favour of trying to make progress in order to ensure that these benefits are now realised. Now, in the absence of a grand bargain on the Doha round, we think the time has come to explore what I call plurilateral agreements. The most obvious one at the moment is the US-inspired idea of a plurilateral process for trade in services. This is a very real opportunity. It would, of course, be better if it included as many countries as possible, and we hope it can be designed to achieve that. Finally, here in Europe, we have to be serious about driving forward the free trade agreements which are under negotiation. Even as a second-best alternative to multilateral trade, they have very real benefits. The cumulative impact of ongoing and potential negotiations has been estimated at about 2% of European GDP and potentially adding about 2 million new jobs. I know that Mr. Sharma, for example, is working very closely with the European Union to try and ensure that we achieve a good agreement with India following South Korea, and potentially in the future with, we will hope to have agreements with Canada, Singapore, Japan, Mercosur countries and others. Now more than ever, given the continuing volatility in the global economy, the argument in favour of openness has to be made very loudly and persuasively, and the notion of reciprocity, which is fashionable in some areas, has to be challenged, because it can very easily lead to a protectionist spiral. Of course, there have to be shared benefits to any agreement, that's obvious, but that's not the same thing as insisting that every trading and investment relationship must be exactly symmetrical or mirrored, with the threat of retaliation if that doesn't happen. A much more productive approach is to recognize the benefits of globalization and to harness them to drive economic expansion. Indeed, we do accept there may be costs in the short run, because lower barriers make it easier to relocate production and transfer technology or intellectual property somewhere else. But there are substantial advantages in terms of low productivity and specialization from having clusters of skills and tasks in particular locations. Furthermore, we can benefit when our partners have a significant cost advantage and we're able to use their products or services as inputs into the products we make. So this means we should no longer be thinking in purely narrow national terms when considering competitiveness. And there's some interesting research beginning to emerge which suggests that there's very often more British value added in our imports than in our exports, because of the complex way in which transnational companies now operate through their trading networks. So for this reason, the UK is in the process of developing a coherent industrial strategy that will allow us to get behind our best performing sectors, the achievements of the aerospace and automotive sectors in spite of very fierce competition, are good examples of what we mean and how government cooperation with business can work extremely well. Indeed, if you look at those industries where the leading companies tend to be American, Indian, Japanese, German and others, you have a very good example of long-term thinking and effective cooperation between government and the private sector. And the companies that are operating there do understand that the UK is completely committed to an open trading and investment environment and want their British operations to operate as a gateway to Europe or a springboard to markets around the world. So finally, this government recognises, we're not complacent, that there are many rivals in seeking international investment in Europe and elsewhere. So in order to safeguard our position, we want to hold the line against protectionism. We want to make the case to our partners for trade liberalisation, for open markets and fair access for developing countries. And we believe that agenda is absolutely crucial to helping us to return to healthy growth. Thank you very much.